Thank you, everyone, for joining Adam Moshofsky and myself today. Adam, thank you for taking a few minutes. This is Adam with Mortgage Express, one of our amazing preferred lenders that I have a whole lot of respect for in the business. So yeah, again, today, this is just kind of a market update, guys, of what both Adam and I are seeing in the market and if we foresee any changes in the near future. So Adam, I'll let you start it off here.
Thanks a lot, Chris. Yeah, there's a lot going on in the mortgage world. The rates are still incredibly low. And we touched on this last time, Chris. Most rates are under 3% for a 30-year fix. That's hard to believe, but
wait. Just pause for a sec. Let's say that one more time. Hold on. Where are interest rates at?
Most interest rates are under 3%, which if you haven't been following that, this is an all-time record basically. And so it's spurring a lot of activity on the purchase front and refinancing. And so people are taking advantage of this, and we're helping those people. And so that was the case last time we talked. And as this is something I follow pretty closely, and there seems to be two schools of thought here on what's going to happen, come early next year. One thought is that the rates might uptick a little bit, and the reasoning for that would be that the Federal Reserve hasn't committed to buying mortgage-backed securities past this year. So the Federal Reserve is actively manipulating the mortgage rates to keep them lower to spur activity. They've been buying mortgage-backed securities, but that they haven't promised that that'll continue. And if that's the case, then rates could inch up a little bit. But then there's another theory out there that the rates are going to get lower and the Fed will have no choice but to keep buying mortgage-backed securities. And if that's the case, you could see rates possibly dip lower. Now, no one really knows for sure, right, Chris? This is all projection and whatnot, but it's going to be interesting to see what happens because there are a couple different scenarios that could play out.
Yeah, interesting. And it's so funny. And the reason that I stopped you there, right, is because we talk about this every day, Adam, but a lot of people, they still think, that interest rates are at, 4 or 5, what they were a year ago. Right. And so it blows my mind still to be able to talk about it. And it's kind of a normal thing at this point, that interest rates are this insanely low. Right.
Yes.
And it's mind blowing to think that's the lowest they've ever been, right?
It really is, and it's an amazing time. And if you can take advantage of it, I think you should definitely be looking into it, whether it's buying a home or refinancing. Now I will say that due to the COVID situation, the guidelines are probably as tough as they've ever been. Especially for self-employed. So for the self-employed, there's a little more detail that we go into to get people approved. So. But we do a really thorough job, Chris. We do it up front. We make sure the clients know what the expectation is and what we can do for them up front. And it does take a little bit of work, but that's what we do. We do that so that we can, secure their approval and either get them that home that they're looking at or secure their low interest rate refinance. So it's definitely something that you want to talk to a mortgage professional about because there's no harm in looking, right? There's no harm in checking, hey, what am I pre-approved for? Right? There's no cost for this. We don't charge you to do a pre-approval. So if you're all curious about it, it's a great time to look into it.
Totally. And a lot of people don't know, right? Or maybe they do, but the interest rates are inversely related to your purchasing power, right? So because they're so low right now, that means that you can buy at a higher purchase price than ever before with the same monthly mortgage. So a lot of people are able to afford a lot more of a house, which is awesome.
Your dollar has never gone farther as far as purchasing a home. True, right? You can definitely qualify for as much home as you've ever qualified before, simply because that mortgage payment is lower, and therefore it's going to fit into your debt to income ratio a little bit easier. So it's definitely a positive thing. I think the housing market is on the forefront of the economic recovery. I mean, really, we had this sharp downturn and we kind of had this, what people call a V-shaped recovery. And there's some argument about whether that's true or not, but you cannot argue that housing is on the front lines of the uptick on the economy. It's one of the few sectors that's doing incredibly well. And, we're right there to try to help people, like I said, capitalize on that new house or refinance. And it's very active.
Totally. So question for you. Are you guys taking in more purchases or refinances at this point in time? Because I know both, it's a great time for both.
Really good question. Typically for myself and in my company, Mortgage Express, we've always been purchase driven, right? That's been our focus. And that's been our focus, and that's kind of what our bread and butter is. Due to the drastic drop in rates, it spurred a lot of refinance activity. So right now there is more refinances going through the pipeline than purchases. And that's atypical. Normally we're 60% purchase, 40% refinance, 70% purchase, 30% refinance. But right now it's a little bit switched because of this. And I would project that come, February, March, it starts to get back to that maybe 60-40 level of purchases. And so anytime you have a big drop in rates, and I've been doing it for 15 years, and every time you have a dip like this, it does always for a certain amount of time inverse, and then it'll slowly go back to kind of a normal spread, Chris, where it's like a 60 or 70% purchase percentage.
Yeah. Yeah. Okay. Crazy. Awesome. That's great.
Yeah.
So I wanted to share more or less, what was this one stat here? Raising home equity. So, well, I'm not able to find it right off the top here.
That's fine.
Here we go. So average equity gained by homeowners over the past year on a national scale, okay, I would assume that Portland's going to be at a much higher rate than this, but it's crazy to think about. Homeowners have gained on average $9,800, so nearly $10,000 from last year to this year, right? For doing nothing, for just being a homeowner.
For being a homeowner, yeah. It's crazy. And I would imagine you're right. I would imagine Portland with our high median sales price is probably higher than that.
Yeah, totally. And specifically, in different areas as well, right? Depending on if you're in Lake Oswego compared to Beaverton, maybe differences there as well. But really interesting to think about, how much equity people are earning every year with being a homeowners and, taking advantage of what's going on in the market. So.
Yes, it is absolutely been a great thing for the people who are already homeowners. Their values have increased, no doubt about it. And some clients are trying to tap into that equity, whether it be with a cash out refinance or a home equity line of credit to improve their home or pay off other debts. And so some homeowners are taking advantage of that equity and putting it to work.
Okay, so I got a question for you here, Adam. What do you expect to occur with the forbearances that people were taking advantage of? And yes, some of them were just saying, hey, I'm still good. I didn't get furloughed or let go or anything, but I just want to take advantage of saving up some more money, right? Which good for those people, right? But for the people that are really struggling and aren't able to pay their mortgage or aren't able to pay that, the net of what's still owed at the end of this, what do you expect to happen here?
Yeah, that's a great question. If you look at, and this is a closely tracked number, okay, the amount of homeowners in forbearance, it has been slowly declining. Okay, so more and more people are pulling out of forbearance, which is a sign that they're getting back on their feet and that they're able to make those payments. So that's a really good sign. Now, there's going to be some, without a doubt, that are going to have trouble because they've run into extreme financial hardship, and that is a terrible situation, and is definitely out there for a lot of families. And so, I imagine that the people that are not able to get out of forbearance and cannot make their mortgage payment, I'm hoping that the lenders will be able to work something out. Obviously the worst case scenario is a foreclosure, and they can foreclose on the property, they can take back the property, and then they can relist it. Now, I'm hoping that maybe with some government guidance, they can create a program to where they can keep people in the homes and work out a deal. but it's gonna, they can't, the lenders aren't going to be able to allow buyers to not make payments for the long term, obviously. So there's going to have to be some type of, some kind of solution there in the short to medium term. And I don't know exactly how that's going to look. But the positive news, and that's what we track, is the forbearance numbers are decreasing. And so that is a really good sign. One other thing I really want to note on this, and this is really important, is that when you file forbearance, what we're finding is the banks are telling you, no, it's not going to impact your ability to get financed. Okay. That's what every single person I've run into has said. Well, it's true that it's not going to impact your credit score, but it does impact your ability to get financed. And what I mean by that is you have to show that you've made 3 on-time mortgage payments since filing for forbearance. So if you file forbearance in June and you miss June, July, and August payments, we need to prove that you've made September, October, and November mortgage payments in order to qualify you for any loan, whether it's a purchase or a refinance. So it's a little misleading what some of these banks are saying, and that it's not going to affect you. It does kind of affect you. And that's an important thing that we've been running into a lot.
So more or less, you're saying if someone's in a sticky situation, they're in forbearance, they're not able to make any of their payments, and they want to then, hey, let's take advantage of some of the equity we have in our home. Let's do a refinance, take some money out, so then we can use that as sort of a savings or whatnot to then pay our mortgage. Right. And you're saying they may struggle with that. Is that what I'm kind of hearing?
We're running into it on a weekly basis, where people are trying to do exactly what you're talking about, Chris. And we have to inform them, hey, you've got to make your September, October, November mortgage payments on time in order for us to close your transaction. And that is industry standard guidance. So yes, it's not impossible. You can certainly get to that point, but you're going to have to prove to the lender that you can make 3 payments on time. And if you can do that, then you're back into the qualification zone that you want to be in. And so a lot of times we just say, hey, we'll follow up with you December 1st or November, right? Once you've made these 3 payments, we can then start the transaction for you. So it's not a no, it's just good something to be aware of if you're planning on doing something like that, Chris, like tapping your equity.
Totally. Yeah, that makes a lot of sense.
Yeah.
It's sad, but it's the truth that we're dealing with these days, which is terrible.
It's a tough situation, and there's a lot of families out there hurting, and I'm constantly thinking about them and hoping that we can all pull through this. But there's certainly those families that are going to struggle, and like I said, hopefully the government will issue some kind of guidance so that we're not having to foreclose on these people. But it's something that I imagine would happen sometime in the next 3 months. There'd be some guidance, 3 to 6 months on what's going to happen there.
Yeah. Okay. So one last question for you, Adam, before we finish up here. Okay. Because I really appreciate your input on this stuff. And really, like your insight. So
thank you.
Gary Keller, Mega Camp, went over some statistics which was really interesting, of here are the industries that have been affected, right? And here are the industries that have not been affected due to COVID. Okay. Leisure, travel, bars, restaurants, hotels, all that kind of stuff, highly affected, right? The other side, we've got real estate, finance, and so he was saying, we're going to have a shift, right? Because we've been on this 11-year bull market, very long cycle.
Yes.
And most likely we're going to see these dominoes start to knock over, and it's going to affect everything right across the board. Do you foresee something like that occurring? And what are your thoughts on that?
Yeah. Well, I think that the industries that you listed, right, the ones that have been heavily impacted, I am worried about. I'm worried about those industries because it doesn't look like our situation is going to change a whole lot in the next 3 to 6 months. Now that's maybe controversial, and some people will have different opinions on that. My personal opinion is I don't think we're going to see a lot of change in the next 3 to 6 months. So I'm hoping, and there's a lot of talk about it right now, of a government stimulus program, which I think is going to be absolutely critical for those industries to survive and small businesses to survive. And so that's why there's so much just passion and feelings about the stimulus bill, because there's both sides, and there's two competing views there. But that is going to be absolutely critical to those industries. I think if we get that, I think that the outlook is looking pretty good in the short term. Now then we go into 2021 and we're going to see how things play out. Hopefully the vaccine will become available and we start getting this thing under control. I think I see a pathway to a moderate success, I guess, if that's how you want to put it. Yeah. So my hope is that the stimulus comes together and we get control of COVID a little bit more. I think that we'll be okay. But those are two big ifs, and we'll kind of know how that plays out in the near term. But I do think the work from home industries, the finance, the mortgage, the real estate is going to be very strong for the next few years. Mm-hmm. And so there's certainly going to be no stopping that. But it's those leisure industries that you talked about that I'm most concerned about. And that stimulus is going to be a huge factor on what happens there.
Yeah, totally. Yeah.
So we'll be watching that very closely. We'll be watching that very closely. Keep an eye on that, because that stimulus is huge for millions of families. Totally. So we're keeping an eye on
because we're all interrelated, like whether we believe it or not. And if you actually start breaking it down, like at a certain point, if a package isn't brought in, then we will see what they like to call a domino effect, where it will start affecting more people.
Absolutely.
So anyways, Adam, thank you very much for taking a few minutes today. Really appreciate it. Always good to see you virtually. And look forward to talking soon.
Sounds great, Chris. Thanks a lot.